Hello and welcome back. Hope you're good, doing well. So we are having a weekly market outlook for this week, 18th to 22nd of September. And I hope that there is sound. You can hear me. Okay, so let's start. So we are having very important week. Fed rate decision is there. If anyone want to join us looking for training or trade setup, just simply visit wave-trader.com. Okay, now let's look at this calendar. So very busy week. So we are having some inflation data is going to be released, and you know CPI data is going to be released for CAD, and CPI data for UK or pound, and very important that we are having Fed rate decision on Wednesday on 20 August, and it is very less likely that the Fed gonna raise the interest rate. So projection is the same, no hike, and we are having a projection for another 25 basis point hike from Swiss National Bank on Thursday 21st, and another 25 basis point hike is projected from a Bank of England. So very important and very busy week. And then on Friday we are having a rate decision from Bank of Japan. So no policy change is likely that there, but they may surprise the market by saying that they are going to abandon the yield curve control at all. So there is the target to 1%, and may abandon. So also they said that they can get out from the negative interest rate policy. So anything can happen. So the coming meeting is going to be important from the Bank of Japan, as both things are on card, getting on from the negative interest rate policy, and abandoning the yield curve control. They said that in previous communications. So Ueda said that in previous communication that they may consider these two things. And another thing is that the manufacturing data is also important. Services data, yeah. So Europe manufacturing and services data is going to be released also, and the US one, and UK. So all this data is also important. So we can see that the trend is down, okay, and the European manufacturing and services both are shrinking, and there we can see that the German one is pretty sharp, and we can see that back in May 2020 it went up to 34 manufacturing in Germany. So actually Germany is in recession, we can say that. So the German manufacturing is shrinking, while the services also went down last month. All right, went up to 47. Services is the one which is just holding the German economy. So but it also slowing down. So when we're going to have significant slowdown in services, then we're going to have impact on the economy. So but yes, German manufacturing and services both are slowing down faster than the other in the EU. So if I'm going to look at the UK manufacturing is also slowing down, right? And flash went lower. Services, yeah. So these and the UK, the US one is also slowing down, manufacturing and the services. Also set to drop below 50. So very important data is going to be released throughout the week. All right. So as I said that the important one gonna be the Fed one. All right, we all know that this is going to be the very important meeting, and the communication which we are having from the Fed officials is that they are saying that they're still gonna raise the interest rate maybe one or twice before the end of this year, before they start cutting the interest rate. So 50-50, we can say that we may not see further hikes beyond 550, right? Or we may see another 25 basis point point hike before this hiking cycle ends. And yes, so Fed is at a crucial point, right? So once they're going to call that no further hikes, obviously they will start looking to cut the interest rate after that, and that's what market is looking right now. Market is looking Fed to call the hiking cycle and hold it, and then start cutting the interest rate. All right, and market to start pricing in for rate cuts. That's the longer term picture. All right, and the other one going to be the Bank of Japan. Bank of Japan is not surprising the market, but yes, when Bank of Japan going to change the policy, when they're going to come out from the negative interest rate policy, it's going to be a big move. All right, this is going to be a big move. So they can surprise, or they cannot surprise the market. They may not surprise the market. So they can wait for another couple of meetings before they are going to do anything. Yeah, but what they are looking, in my opinion, Bank of Japan is looking rest of the major central banks to call the hiking cycle, all right, and then they're gonna catch up them. And once the major banks will stop raising interest rate, then Bank of Japan going to do something, all right, and that will be the peak, we can say that, in the hiking cycle across the major central banks, right? Yes, they are waiting for them to, Bank of Japan is waiting for them to stop. The other, like ECB, Fed, BOE and BOC, yeah, so all those major banks. So now let's move on to the setup. So we are not having major movements in the market, specifically on the dollar. Dollar is still doing exactly similar where we left it last week. Yeah, so we are having some sell-off on the dollar CAD from that top. We are not having a major change on the dollar CAD. Dollar CAD is just simply coming down from that top. All right, that hasn't changed. So we broken down that ascending wedge, we can say that. Yeah, so price is running somewhere there where we can see another breakout for more downside, or price still can go back up for another leg higher. I don't think so that we're gonna have that. Dollar is just simply sitting up for Fed to Fed rate decision. All right, so, and after that we may see dollar to move. Why we are bearish on the dollar? The reason is very much simple. The Fed is looking to stop raising the interest rate. Dollar was rising because of the higher interest rate, right? And now they are looking to stop raising the interest rate, all right? And in longer term, you should expect Fed to cut the interest rate, all right? So when you expect Fed to cut the interest rate in longer term, then you should also expect the dollar to drop in longer term. All right, so simple logic. Yes, I got some cold, so that's why you may experience that my voice is a bit heavy. So we are having some strength on the Australian dollar from bottom in the previous video analysis. We were expecting it to bounce off from there. So we have these areas. We are having some move over there, okay, and Australian dollar is reversing from the floor. So so going higher slightly. So DXY, yeah, still pushing higher. Okay, and last week we were expecting it to, it went lower. Last week we were expecting it to continue to keep falling. Yeah, so we got some drop over there at this area. It came down and then again it picked up for another leg higher, so still within that channel. Right, so New Zealand dollar very much similar like the Australian dollar. Okay, we got some move, went up to that channel and struggling to break through that descending channel for upside. So we may get a move for upside on New Zealand dollar. So this also went lower. Right, so last week during the meeting we were expecting it to bounce back and go higher. Yeah, but it went lower during the week. Yeah, so there is still a chance that pound can struggle, you know, for more downside rather than, you know, reversing back to that, you know, the trend which we are having from all the way from that top to downside. Yeah, so it is there at these areas. So we'll talk about that. We are having rate the CN on a pound. Okay, and also we are having inflation data. So inflation data is going to be really important before the Bank of England rate the CN. So the inflation data is going to be released on 20, right? So on 20 of September at 7 a.m. and the projection is the higher inflation simply. All right, so the previous inflation was 6.8% and now they are expecting it to slightly tick higher, 7.1%. okay, the reason is that the oil prices went higher, which can cause the inflation to slightly tick higher. All right, so if inflation comes harder, then obviously, you know, we can expect that the Bank of England can be hawkish. Right, so Bank of England is also looking to raise the interest rate with 25 basis point. Yeah, then they can be hawkish, so that can, you know, give some strength to the pound. All right, so UK is simply facing, you know, stagflation, lower growth and higher inflation. Okay, so that's the pound. We haven't seen major change. Copper slightly went lower, then again there on that weekly chart. All right, so yeah, so equities, these charts are still bullish. We're going to talk about that. These opportunities were really good. Yeah, so there's still, Amazon is still going higher, so we're still trending for upside. We're going to talk about the equities, yeah, ahead of the Fed rate decision. So some, you know, weaknesses came last over on the indices. Yeah, ahead of the Fed rate decision, they dropped. Market was, you know, market started to, we can see that the Friday was strong. Friday close was strong bearish because market was expecting that the Fed is going to come this week, and investors started to, you know, build their positions accordingly. So Friday was bearish closed. All right, so Bitcoin also bounced back from this low. All right, and oil, we were expecting oil to drop, but oil went higher. Right, so still trending for upside. But what I see that the oil is just simply peaking. The way which started from oil from there, okay, is just peaking, and we are going to see it to continue to keep dragging lower, even below 65. Yeah, so this is going to be a, you know, this might be a, you know, weekly top on oil. Yeah, we're gonna look at that too on oil. So yeah, so let's move on to the setups. Okay, so dollar index. Yeah, so some of you guys are asking that why we are bearish on the dollar, why we are selling, why we are looking, you know, dollar to drop. So if I'm gonna look at the bigger time frame, I have explained that already, guys. All right, so this is the longer term picture. We are looking on the dollar index to just keep, there is only one factor which can drive the dollar to go higher. Yeah, but fundamentally dollar shouldn't rise. Fundamentally dollar shouldn't rise. The only reason which can drive the dollar to higher, if, you know, we are having, you know, something is some breaks in the system, and which cause the risk assets to fall very, very aggressively to the downside. Okay, then there is nothing except dollar to gain. Okay, then everyone will run off. When risk assets start falling aggressively to the downside, if something breaks into the system and the people run after the safety, then only dollar will be the currency which is going to be the safe rest rather than the any other currency or any other assets. Yeah, so dollar, gold, and silver, the traditional safe havens, they they're gonna rise. You shouldn't expect risk on assets to drop like COVID crash, all right? Because during the COVID, economic activities stopped, right? When economic activities stopped, then you can expect that everything to just simply crash. So we are not having that kind of scenario yet. All right, so lockdown stopped everything. No oil demand. You don't have any demand at that time. That's caused the everything to crash. So we are not expecting that kind of crash. So we are expecting a slowdown. All right, so slowdown like I have shown you manufacturing data, services data. That's telling us that economy of those countries are contracting, right, rather than expanding, contracting. So you shouldn't expect that kind of drop. But yes, if that kind of drop, if something like that kind of happens, then you should expect dollar to just gain. All right, but if fundamentals, based on fundamentals, we shouldn't expect dollar to gain, right? So if I'm gonna let me explain that again, why we are not expecting dollar to gain, and what can cause the dollar to gain, right? So simply we need to pull out the inflation chart on it. All right, and so let's just put the interest rate. That's the interest rate chart. All right, and that's the inflation. Okay, so there and if I'm going to pull out US money supply, right, M2 chart on it. Okay, so these three charts are telling us that why we are not expecting dollar to rise. Okay, so this yellow line is telling us the money supply. Okay, what happened first? Money supply came into the market, a lot of money supply. So Fed printed a lot of money. This is the COVID crash here at this area. So we are having COVID crash here. That was the COVID crash. Economic activities stopped. All right, Fed started to print a lot of money. Inflation went lower. All right, so Fed printed a lot of money. What happened? With that money brought inflation. All right, when that money brought inflation, what Fed started to do after that? Fed started to raise the interest rate to tackle the inflation. Okay, so interest rate went higher. All right, now what's happening now? Money supply started to shrink, right? So after raising the interest rate, right? So there where we can see that the Fed started to raise the interest rate. So after raising the interest rate, money supply started to shrink. Fed, started to take money away from the market to bring down the inflation. All right. So when money supply started to shrink, inflation started to fall. Okay, when inflation started to fall, dollar started to come down. All right, so there we can see that the dollar went after the inflation. So inflation came first there within this circle, and then your investors started to expect that Fed gonna start to fight with inflation, and for that they have to raise the interest rate. Right, so market started to price in for a stronger dollar. All right, and then Fed started to raise the interest rate. Okay, this is called lag. So we call that lag, policy lag. All right, and now what's happening over there? So I'm going to remove that. So what's happening now? So money supply started to shrink. Yeah, so because of that money supply shrinking, inflation started to fall. Yeah, and higher interest rates, inflation started to fall. Now inflation is going down, and we should not expect Fed to keep the interest rate over there like that, like they held the interest rate lower at these areas. Okay, so what Fed gonna do? They're gonna start cutting the interest rate and gonna start following the inflation. All right, they're gonna start going after the growth. Okay, after they're gonna start getting worried about the growth. All right, they're going to start saying that, oh, growth is slowing down, we have to, bring the growth back, and they will start cutting the interest rate. When they will start cutting the interest rate, the trend which has already begun over there on dollar, that trend has to be bearish. Okay, that trend has to continue to keep dragging lower for longer term. So lower interest rate will also fuel dollar to go down. Okay, so that's the fundamental and technical reason behind dollar to keep falling over time in longer term. So the other reason gonna be is that for dollar to gain, the other reason is the only, if something breaks in the system, and if I'm gonna look at the let's say on the Nasdaq 100 index, okay, if something breaks during 2008, all right, or during 2008, or there we can see that this is the 2008. So during this is by the way, this is tech stock, all right. So during 2008, we have seen a significant sell-off on the indices, and in 2008 we have seen crisis, simply the mortgages crisis, I think, yeah. And real estate was really struggling at that time. The way real estate market, the property market is struggling right now in China, right? So Chinese property market is doing exactly similar way, the way we were having in 2008 in US. So that caused the people to run away from the risk on assets and pile up their cash or their money into the dollar. All right, so if I'm gonna look at the 2008 and see there, okay, there we have seen that the dollar, equities went lower, dollar went higher, and also interest rates went lower too at that time. All right. Right, so if I'm gonna remove that money supply, then we're clearly gonna see that. So this is the money supply. So if I'm gonna remove that, there we're gonna see that the interest rate, Fed started to cut the interest rate. Interest rate went lower, and even inflation went lower, but dollar went higher, and indices went lower. All right, so this strength on dollar, wasn't driven by policy, by Fed policy. All right. Okay, so technically dollar should fall, right? So dollar should fall when Fed was cutting the interest rate, yeah, and inflation was going down. Dollar should fall, dollar shouldn't rise. But the problem wasn't there at the policy, all right? At that, actually there was a problem with the policy, but the problem was that there was a break in the system, all right? And everything was just running away from the risk on assets, selling companies' shares, taking their money away, and that was causing going away. Wasn't expecting growth at all at that time, and risk on assets were just simply crashing at that time, which was fueling the dollar to go higher even when Fed was cutting the interest rate. All right, so right now what I said, over time we should expect Fed to cut the interest rate and inflation to go down, and based on that, dollar should fall in longer term. Okay, but if we are going to see a significant slowdown and break into the system, similar like we have seen in 2008, and based on that, investors are going to run away from the indices, then dollar is not going to fall. All right, the dollar will go for another leg higher, and once Fed will start cutting the rate aggressively, and we're going to have some faith in the market, faith in the risk on assets, then you're going to see that the correlation which we are having, the negative correlation when equities goes higher, dollar goes down, that will start to play out. All right, but based on the policy, dollar should fall longer term to the downside. That's the reason we are looking for dollar to break down. All right, and the reason which we are why we are having strength from dollar, why we are having that rally on the dollar from this low, the reason is very much simple. Market is still expecting that we may see another rate hike from the Fed, one or two. Okay, one or two more rate hikes can appear over there from the Fed. That's driving the dollar to go higher from from these lows, okay, and go higher. So while we are not expecting, we are just simply expecting that the peak is coming. Okay, if I'm gonna go back and gonna look at the this chart again, so there we can see that the inflation is running at 370. Okay, there you can see that the inflation is running at 370. All right, so there we can see that the inflation is running at 370 while the Fed fund rate is running at 550. So clearly, Fed fund rate is way above the inflation. So this gap gonna shrink over time. Okay, Fed cannot hold interest rate over there. So we are having a gap over there. The Fed is just simply holding interest rate over there because of the core inflation. Core inflation is still high, still above 4. All right, that's causing the Fed to hold interest rate higher or even look for another 1 or 2 time hike, right? But this gap gonna shrink over time. This gap cannot stay over there, for longer term. So that's another hike over there from the Fed. Yeah, so another 25 or 50 basis point hike is causing some optimism on dollar, and that's causing the dollar to go higher. Once that optimism gonna be over, we're gonna see that the next bearish move on the dollar. So that's the reason we are trying to catch the continuation trade on the dollar for next leg lower, right? And as long as price stay within that channel, you are looking it to hold this trend. Okay, the trend is very much clear over there, right? And the price is just simply running within that trend. This is the trend. All right, nice. Price is not there. We were expecting it last week. We'll break out, all right, and clear that trend and continue. But we haven't seen even retest of these moving average, and price has just simply popped up because of the ECB interest rate decision. All right, and right now it's testing it again, another leg higher. So what you are simply looking for from the dollar, all right, so you are looking into these areas to break out for another leg and then drop, all right, or hold that and then drop and come back within these areas, okay, and then go for another leg higher and then drop, or just simply reverse that channel. Okay, we still can see another push before the Fed rate decision. Okay, and after we're simply looking for dollar to drop after the Fed rate decision. Okay, so you're paying attention this flag, these areas, get these tops and these tops to hold and short them counter trend trade, and if it falls aggressively, then simply fall and continue to keep dragging lower the way my arrows are showing, right? Trying to catch this area, all right, and continue to keep dragging lower this counter trend trade. And if it push for another leg higher, which is possible because Fed rate decision is still there on Wednesday and can break out, and then again you are looking it to hold that previous high and then start falling. All right, so euro dollar very much similar. All right, so pound is just simply bouncing back. So we are looking a similar move. Okay, so if I'm gonna invert that chart, similar structure, similar formation, just need to pull out my another trend line over there. Okay, very much similar like the DXY. There you can see that similar flag is just simply happening over there. We still can see another leg higher like this area lower, okay, on euro dollar, before we're gonna see counter trend move back to the trend, right, like that within the moving average. So I'm gonna invert that chart back to this. All right, so like that, we still can see another leg lower like that. So very much similar like last week. So last week we were expecting it to go back up. We got some short-term move, but we haven't got all the way up to that trend or complete reversal all the way up to this previous high. So very much similar like that. So after the Fed rate decision, you are looking it to counter back within that trend. All right, and on longer term, all right, so I'm still saying to you guys that as I said earlier, that in case of something break into this system, all right, then dollar still can gain. Okay, still can gain all the way back to this previous low. All right, hopefully you understand that now. So again, a counter trend move, all right, you're looking for, first of all, you're looking price to hold these areas for one more leg lower. All right, these areas to hold and price to continue to keep dragging lower or much lower, and then again from the lows to go back up. Okay, that's the euro dollar, and pound dollar is also similar like that. Okay, so last week we were expecting it to go back up, right? Break out and go back up within that trend. Another leg lower appeared. Price is still, trending to the downside. So again, very much similar like the last week. So counter trend move to happen, specifically during the Bank of England rate decision. I'm gonna pull out my arrow. Okay, so from this low to go there, counter trend move. All right, and if that rise aggressively, then go all the way back to that high. All right, so looking for this similar channel, the channel which we are having on dollar index. Okay, I have just inverted that chart, so we still can see one more leg higher like I have shown you on the dollar index. All right, and then fall and counter trend move. So hopefully you understand that. So we got some strength on the Australian dollar from those lows. Okay, and last week we were expecting correction, and it went lower. Some movement happened over there during the ECB rate decision, went back. Okay, but it looks like that the move is pretty slow. Okay, we are not having a sharp aggressive breakout for upside, so we still can see another leg lower. All right, so what I can tell you is that if you see that the euro and pound, they are not falling, and pound is still not rising, and pound still keep dropping lower, okay, and euro is still keeps dropping lower, okay, then there gonna be a one more leg lower opportunity over here, one more shot here, okay, back to that previous lows. If I'm gonna pull out my pound dollar or euro dollar chart, all right, let's see, pound dollar chart, then you are trying to catch this shot. You see that the chart is clearly telling us that pound is falling against the Australian dollar, all right, pound is falling against the dollar, pound is struggling simply. All right, this chart is telling us that the pound is still struggling, and if you see that the pound keep dragging lower, all right, okay, then you are trying to catch this trade, okay, from these highs, these areas, looking to catch that move to the downside. Otherwise, we are still bullish. All right, if we are going to see a big move is going to happen to the downside on DXY, then we're going to see that the Australian dollar going to pick up very aggressively for upside, and we're going to have that move. That's our longer term picture, right, for a while, right? So I wouldn't suggest you to go and look for this continuation trade as this is not making sense. Okay, we can see breakout, right, and it can continue like that, but this is not at a good spot to chase this move. As long as you're going to see that the dollar is gaining or DXY is pushing higher, euro going down, pound going down, right, then this pair is not at a good spot to buy, right? Then there's going to be a pressure. You see that the move is pretty slow. Okay, if I'm gonna, you see that the move is pretty slow. Deep correction, then up, then again correction, then up, okay, then again drop. So a kind of sideways move is just simply happening over there on the Australian dollar against the dollar. The reason is that the euro is trending lower, right, and the trend is bit sharp, and pound is trending lower, bit sharp. That's why Australian dollar is pushing higher against the dollar, but not as aggressive as it should be, because dollar is still strong. That's why it went into a sideways market, like a sideways market. So trending move is less likely until we are going to see a significant drop on dollar. All right. So if they keeps falling, pound, a DXY keep breakout for another leg higher, euro goes down, pound goes down, all right, then this pair still can tag this low, and an opportunity is still there. Opportunity gonna be still there. Okay, so you don't look for continuation for upside at current price, only look for other pairs and dollar. If just dollar keeps rising, then you are looking for this to drop for another leg lower. All right, a kind of you know, a different type of analysis than the last week. Last week we were expecting it to bounce back and continue to keep pushing more high, and we are having strength. Okay, we are having strength on the Australian dollar across the market, all right? But the strength which we were looking on the Australian dollar was against the pound, was against the euro, all right? And those pairs are doing really well. They are trending lower. So if they keep falling very, very aggressively, yes, okay, yes, there going to be a buy opportunity from these areas, okay, again for this move, okay, but not continuation for this week. We'll see after the Fed and next week. But yes, you are looking for it to the similar analysis on this chart too, okay, same analysis. I'm going to pull out my pound chart again, okay. As long as pound is struggling lower, then you see that the pound is struggling, trending lower, right? So they're going to be either remain into that sideways market, right, or trending lower for another leg lower. So there is a chance that another leg lower can happen over there. So you only looking for, you know, longer term up, one more leg lower, right? And every time when they come closer to the previous low, for short term trades, for buy, and if they take out aggressively for upside, then you are looking to hold that trade for more upside. But yes, market, they are in a sideways move at the moment. We are not having a trendy move yet, but this price action is telling us that yes, they are preparing for breakout for upside for longer term, all right? So that's why we were bullish on them from the lows. So similar analysis, okay? If I'm going to pull out and I'm going to make it a bit more clear, you see that as long as they remain below that 4-hour moving averages, okay, these areas, then you are looking them to draw for one more leg lower. Not a best sell opportunity. You are selling at the bottom, but as long as dollar going to keep, you know, trending higher, they will, you know, draw for another leg lower. Okay, this is, again, I'm telling you guys, this is not our best you know, trade which we are looking at the moment. Okay, let me explain to you in a different way. So if I'm gonna pull out another chart, okay, dollar CAD is already you know, pushing nicely ahead. So we are having weaknesses on the, you see that dollar CAD is ahead at the moment, and the reason is the oil. Okay, oil giving strength to the dollar. So dollar is weakening, dollar is getting weaker against the CAD, against the Australian dollar, against the New Zealand dollar, all right, but not getting weaker against the euro and pound. So need to watch, there is still possibility for another leg lower. Okay, so same goes there, dollar chief still can drop for another leg lower, all right, and still trending for upside. You only can go and look for short on this chart once you see that the aggressive sell is coming over there, correcting just this formation. Okay, if this formation is appearing over there, you are looking it to drop. Otherwise, don't buy, right? Don't look for buy. So look for this, you know, sharp sell-off to happen during the Swiss National Bank rate, the CN. All right, there you see that. So during the Swiss National Bank, so if they're going to raise the interest rate and going to be hawkish and going to say that further rates high going to come, which is less likely, then you may see another sharp move over there and the continuation to the downside, and just stop behind that. Dollar CAD, okay, dollar CAD started to fall, and as long as you see that the dollar, you know, dollar is just simply falling because of the oil. If you keep falling, then you know, you are buying the dollar, selling the dollar on other pairs. Okay, that's why I'm showing counter trend move on euro dollar, and counter trend move on pound, and counter trend move on DXY. So they're gonna you know, push up. So what you are looking simply here, correction is just simply turning over there. So I'm gonna pull out a rectangle over there, and this is the place, price to hold that, all right, and break down. Okay, hold that area, hold this place, simple flat formation, push up, hold that, and then break down and continue, specifically during the fat rate, the CM. If we don't see that breakdown to the downside, okay, and you know, the inflation picture is going to surprise. We are having inflation rate The data is going to release over there. Yeah, CPI on tomorrow at 1 p.m. on CAD. If this is going to surprise for upside, and projection is down, last month was higher, the actual was higher, so you know, if that's going to surprise for upside, okay, then we are going to see breakdown, continuation to the downside. And in case if, you know, inflation is dropping significantly, then obviously that's going to be bearish for CAD. Okay, one more leg higher can appear over there. We are not anticipating that one more leg higher at the moment, simply, guys. In case if, you know, a big sharp move is going to come on the oil to the downside, so you are just simply looking it to continue to keep dragging lower. All right, but be careful when you are looking to sell at the current price. Make sure you understand that the move has already begun. You may have missed that top, all right, and the price, you know, still can you know, stop you out before going to continue. But yes, the 1 hour trend to hold. Okay, this is where the 1 hour trend is coming. 1 hour trend to hold and break down and continue to keep dragging lower. Okay, so chief yen still can push up for another leg higher during the Swiss National Bank raid the CN. Okay, so breakout, if you see that the breakout is coming during the Swiss National Bank raid the CN, okay, short term buy and go all the way back to that high. All right, breakout, this short term, and then again all the way back to the high. And again, if simply Bank of Japan is doing something, you know, unsurprising, something surprising thing, then the longer term reversal. All right, then the breakdown to happen. All right, reverse. Same goes with the euro yen. Okay, we still can see another push more higher back to the previous top. Last week we got a gap over there, and price, you know, respected that gap, if you remember that. All right, so the gap respected, you know, it respect the gap and dropped. So on the FXCM, there you can see that. Yeah, so price respected that gap. So it came there. Again, this might be a reversal gap and can be confirmed by the Bank of Japan. All right, so again, when euro comes there at this area, all right, you're looking at to watch first. Right, this area, right, this place. Again, price shouldn't close above that. So if it goes above that, all right, then this gap going to be ordinary gap. All right, so far price is holding that gap. We haven't seen that the price closed above that. All right, so we should watch price action over there and break down and continue for downside. Okay, and if in case we see that the price breaks out and goes higher for another leg higher, okay, then yes, as shown on the you know, chief yen, then one more leg higher. Okay, like that, one more leg higher, but this, it has to cross, you know, the gap first, so then higher. And then again, you're watching price action like I have asked you to look for there. Okay, and then again reverse for longer term. The dollar yen also going to be important, specifically during the Fed rate decision, and also going to be the important during the Bank of Japan rate decision. Okay, we are looking for Bank of Japan, or Bank of Japan is, you know, they are fighting with the weaker yen right now. The OEDA commenting and showing some concerns about the weaker currency. Even the Ministry of Finance and Japanese government, they are, you know, showing their concerns regarding the weaker yen. So intervention can happen, guys, at any time. You're looking it to go all the way back to this low. So first of all, this trade or to these areas. So if I'm gonna look at the lower time frame again, okay, so price held that gap, the gap which we were talking about last week. And there we can see that the gap is still being respected. Even we have got a gap again this week, but the gap is, you wasn't big enough. All right, so there we can see that the price still respecting that gap. Price hasn't closed above that gap, and we are having two, a big rate decision this week: Bank of Japan and Fed rate decision. All right, so you are paying attention at these areas and looking for price to stay below. Do not go above that. All right, and every time when price comes there, you're simply looking for a tight trade over there, putting stop behind that and looking for this to fall. All right, and if you catch that trade, just move on to the break even and let that to run. Okay, the first run you are looking is to fall within the daily moving averages, right? And daily move. Okay, and if that drop is going to be pretty nice like this previous one, right, then sharp. Okay, then looking to extend all the way up to 127. Okay, so breakout is possible for upside, and this is the intervention place. Okay, this is the intervention area. Breakup is possible, so there is nothing fixed or glued over that. The price cannot break out, and you should spend all your capital over there on that one trade. Okay, not that way. You only can maximize your return by looking at the conditions which you are having over there. All right, so the conditions might be favorable at there, all right, and can give you a good return like 1 to 5, 1 to 10. Okay, so trade like that. Don't try to make money 100% return from just one single trade from these charts. Okay, they're risky, so something like that. So try to catch that. First of all, you are looking at one-on-one trade. Okay, and if that's doing really well and sharp sell-off is just coming like we are having here on our left side, all right, then you are looking this to row. Okay, so 40 to 50 pips stop loss going to be reasonable, not bigger enough. So looking for 1.5, and then looking it to grow for longer term, or at least for medium term. Right, so yeah, so it can turn to a really good trade. All right, like 120. So yeah, these areas first of all you're targeting, right? These areas. So we got a potential on this chart. Yeah, so specifically when intervention happens, then we may see a big aggressive sell-off to the downside. So you're paying attention on this chart, guys, really well. All right, so we are having a dollar yen and dollar yen to after dollar yen pound yen. Okay, so very much similar on this chart. So we held that gap. Okay, we still can see another leg higher on this. This seems to me a daily correction. Yeah, so the similar structure, similar pattern, but again very much similar analysis like last week. We held that gap when we dropped from that gap, so you're paying attention again on that gap. So if I'm going to go to the pound yen, all right, FXCM, and if I'm going to go to 1 hour time frame, okay, so you're paying attention over there. Again, if once price tests this area, specifically during the Bank of Japan and Bank of England rate decision, you see that we are holding that gap, and if price tests that gap again, you're paying attention, all right, this area, and looking price to hold that gap, these areas, and looking for this to drop first. So if price do not respect that gap, okay, and goes higher, then the structure is very much simple, all right, then go higher, another leg, but another leg, and then start giving us counter trend move again. We are not interested in that buy move, guys. CAD yen, yeah, CAD yen, we were expecting it to drop last week from that top. It went higher, and testing the previous top, very much similar like the dollar yen. Okay, you're looking for this to fall aggressively, correct, and go down. So slight push up can happen and violate that resistance before going to get down. Okay, so same again. So looking CAD yen to go down. All right, so same on the Uzi yen. So Uzi yen can also slightly push higher before going to drop. Okay, this one more push up can happen. So you're paying attention within these areas and looking for them to continue to keep dragging lower. The structure is showing nicely. So Kiwi yen is also all right. So very much similar like that. When it is testing the previous top, you're looking it to drop. Is daily 4-hour time frame chart. So euro pound is still running within that wedge, the wedge which we were having over there last week. We still may see another leg lower. Right, I wouldn't suggest you to have a trade on it. This is not at a best spot where you can trade. Okay, in case if during the week you see that the pair drops for another leg lower, okay, then looking for sticking to that bigger move for upside. So in case if a very sharp aggressive breakout comes, then you can be interested on this chart. So a kind of neutral chart. All right, so pound chief, you know, very much similar like last week. All right, so we may see another leg higher from there like that. Again, paying attention. Also, breakdown is possible, but you're looking for a shot to move first within these areas, from these support areas. CAD started to fall, and that was a possibility which we set last week, and CAD can go all the way up to that previous low, guys. Not expecting it to go that much far away, right? But this is the chart. We don't have a perfect sell or sell opportunity over here, right? But it can break down for another leg lower. On 1 hour time frame. All right, 1 hour time frame, these areas, and can drag. Yeah, chief keeps pushing more higher. All right, it's making your case for EuroCAD to keep trending lower. Right, so it's finally getting back from those lows. As I said that previously, you're gonna be lucky if it keeps pushing more higher. So far, it keeps pushing more higher, and caused by the higher oil prices. So still can continue. Yeah, still can continue for more upside. And in case if we see that the Swiss National Bank is going to be more hawkish, okay, then break down and fall back to that previous low. Pound New Zealand dollar keep trending lower. Okay, pound is falling, and we may see that drop to continue to keep falling all the way back to this previous low. All right, so continuation trade to just keep happening over there. Last week we were expecting a triangle over there, if you remember that, right? And we are having a continuation trade over there. So again, similar. Okay, one more push up, the trend to hold, short-term trade, and break down and continue to keep trending lower. All right. So specifically after the Bank of England rate the CN. In case if we see that the push up is going to be deeper up to this area because of the Bank of England, okay, that won't change the bigger drop or the downside. I'm not anticipating it to go that much far away, by the way, right? So same move you are looking here. All right, so 1 hour trend to hold, push up, hold that trend, short-term trade, we can break down and continue to keep trending lower. So we are having a nice leg lower happening over there on this chart from the high. All right, these areas, if you remember, okay, nice leg appeared over there. So this to go all the way back to these areas. So as long as these two charts keeps falling, all right, these two charts keep falling, then the trade for upside gonna be okay. So what these two charts are telling us here, okay, these two charts are telling us that the sell-off opportunity, the sell-off is going to happen on dollar in coming days, coming weeks. All right, so we're gonna see dollar weaknesses. Same goes there. All right, So last week we were expecting a drop, and it is dropping, and the same. All right. So last week we were expecting flat formation. We haven't seen that exact flat formation. Price slightly spiked up, all right, but didn't test that before going to drop lower. Okay, and we have seen a flag over there and broken down and continuation to the downside. Nice, keep price, still keep dropping lower on that. Correction after having that correction. So what you are simply looking again, just that trend to keep moving. Okay, again, same flat formation, slightly push more back up, hold that top trend to come, okay, and continue to keep falling. So again, inflation rate and Bank of England, those two things can change the pound picture. So yeah, so when that data is going to be released, make sure you are protected. All right, so New Zealand dollar is just keep falling, and it can drag more lower, slightly more lower. All right, so what you are actually looking is that the drop is slowing down, right? It still can keep dragging lower slowly, but that is not the trade. Okay, from lows you are looking for this to bounce back, go back up. All right, from these lows, go back up, and possible longer term reversal. How far that goes, we'll see. Right, this bigger flag to go into that way. All right, so short term moves first, and if breakout comes, then looking for it to go back up. So Uzi CAD to drag lower. Okay, Uzi CAD can drag lower. As I said that in the previous weekly market outlook, as long as your EV CAD is keep falling, then this will remain a bearish. Okay, one more leg lower, this or new low. So if price tests those areas, okay, and Kiwi CAD keep falling, then you're looking it to keep dragging lower. Right, test this area. So Uzi, Kiwi, same again. We are not having much on it, okay, but breakdown and drag lower. Euro Australian dollar, okay, these charts are moving, and these charts to drag more lower, all the way somewhere close to this place. So last week we had a pullback on it, okay, it dropped. So simply looking for trend to stay intact. All right, so trend to stay intact. All these areas, all right. So this trend like it held over there, okay, and then break down and continue to keep dragging low. So Euro Oz is very much similar. Four charts are similar, all right. So it's also still dropping, and you are looking this to drop and push, drag more lower. At least come within the daily, all right, like this daily trend. So early sell-off is just happening over there on these charts, means that the strength is ahead on risk on currencies, guys. Okay, so hold this area or slightly push more higher, right? Slightly push more higher within these areas or these places where you're paying attention. Breakdown and this short-term trade first, right? Or breakdown and continue to keep dragging lower. So trending move. In case if we don't see those moves and they go back up, all right, we are still going to stick. I mean, going back up those areas. This is big change. There's going to be a change. I'm not anticipating, but in case, let's say if they push deeper, right, up to 4-hour time frame corrections like they have done here, All right, then done here, or then still looking for the breakdown to happen and continue to keep dragging more lower. The Uzi Chief is also pushing more higher, yeah, so it gone back up. So again, the the thing is same that when you are buying Uzi against the Chief, then the risk is always there. Okay, it's a trending, you know, we simply we may see breakup. All right, when you're buying Uzi against the Chief, understand that Chief is playing as a safe haven right now, so always risk is over there. Make sure you use proper risk VAR ratio, proper stop loss over there. Okay, but yes, I'm expecting them to just keep crawling slowly for upside, guys. Yeah, they can break down and continue to keep falling. So make sure when you are buying, you understand the risk. They are not at a best spot to buy, right? Just, yeah, short-term trade can happen over there. So last week we were expecting dollar rise against the rand from this low. Seems that it is not going to test that, right? And prices just simply breaking out those daily corrections. Okay, so yeah, stay trending, stay short-term trending. Right? These areas, all those areas, or this high, this low, sorry. Chinese yuan. So we got some strength on Chinese yuan over there at there last week. But we can see that the Bank of China is struggling right now. They are in a very tight situation. Yeah, every time when currency gets stronger, they change their policy, which cause the currencies to get weaker again. Yeah, we still may see another leg higher, for next move. Right, so it can test that top. So not a best pair at the moment. So much manipulation is just happening over there on this pair, guys. So we are having again one more leg lower on the dollar against the peso. So same analysis like last week. As I said, okay, once you see that the price is coming over there, testing that, you're watching it bounce back, come in, you're looking it to buy like this and looking for it to go back up. All right, this price action. If it doesn't appear over there in price breakthrough, okay, you're watching this price action from new lows. Okay, and looking for this to go back up for longer term. Right, this move to happen all the way back to that high, and in longer term, further high. Break through that high. It's going to break through the high. So understand the cost is very much high to buy a dollar against the peso at the moment. All right, so swap is very much high. Make sure you understand that, because interest rate is very much high in Mexico. So yeah, understand that. Okay, so buying from the lows, some short-term buying opportunities appearing over there within that wedge. So struggling, euro is really struggling against the franc. And so you look in these areas, right? Looking at these areas, the short-term buy opportunities and go back up for longer term. Right, so this flag to break up, all right? So this flag to break up, it can be really sharp and can happen with the intervention simply from central bank. Okay, so we're having indices, so we can see that the formation which we were expecting last week is simply playing out over there. Okay, one more leg possibility is just simply happening over there. So indices, simply gone in a sideways market at the current price. They are still can drag lower for another move. Okay, they can test that, and this is by the way. But yes, we are bullish, simply bullish, and looking for them to finish the year at higher prices. That's the 4-hour time frame structure, guys. Yeah, so nothing, we haven't seen change a lot on the Dow since last week. All right, so still trending. Yeah, and momentum is building over there for breakout. We can see that the momentum, like we have seen there, right? So momentum is building over there for a breakout move for upside. So the next leg higher. So how to trade the Dow? All right, so Dow still, we have seen this move last week on Friday, very aggressive move to the downside. So we don't have a perfect, continuation buy opportunity over there, or the 15-minute buy opportunity over there. Okay, so we still can see this lag lower. Okay, what I can show you is that there is a correction which is just building over there on for 15-minute time frame. Okay, so you look in that correction during the New York session today. If that breaks out aggressively, okay, then you are looking to go back up, right? Breakout, go back up all the way and break through that and continue to keep rising aggressively for upside. If we don't see that breakout, right, don't see that breakout, this breakout, right, then simply you paying attention on your support areas within these places. These areas, these are the support areas where you're paying attention, price to hold, do not fall and go back up. Same on Nasdaq 100 index. Okay, so last week I have explained that we still may see another leg lower. Okay, so if I'm gonna remove these arrows, so we are having a kind of triangle formation is just simply building over there. Like that. Okay, so if I'm gonna look at the daily time frame, right? So this triangle is still can be in a formation. This triangle on Nasdaq 100 index. Okay, but at the end of this year, we are expecting Nasdaq 100 index to finish the year at the high, right? At this high, at this previous highest, at 16,800. Finish that at that high. So if I'm gonna look at the daily trend, so daily trend is still can be tested, right? This area still can be tested, guys. Okay, so this area still can be tested. So again, the analysis is very much similar like the Dow, right? This is where you're paying attention during the New York session, this place already. Okay, if this breaks down very, very aggressively, then simply again visit this area and then give us a buy opportunity for longer term again from these lows for upside. So right now I'm not anticipating this to break down. Okay, what I'm anticipating is simply on 15-minute time frame during the New York session. Okay, you're looking for this to break up, right? Break up, aggressive move, correct, and keep rising. If we don't see this break up and price, this flag breaks down, as I said, that one more leg lower all the way back to the bottom on daily time frame and past the moving averages on daily time frame and then go back up. It's a decent move. Okay, it's not a small move, it's a decent move and big move and can be driven by anything. Yeah, so can be driven by FAC, can be driven by PMI and services data this week. Yeah, so big week, we can see that. So even these PMI data can drive that move. Yeah, so significant slowdown in PMI data. These PMI data can drive, one more leg lower on indices. And if these, this data is going to be good, Fed is going to be dovish, yeah, so going to be a good story for the indices to just stay trending for upside and continue to keep rising. So they are open for both sides. Okay, the indices are open for both sides. As we can see that a lot of mess is just simply happening over there. So they are not finding any direction within this area. Okay, so indices are not finding direction in this area. So that's telling us that the investors are still, struggling to find a way over there that where to go on indices. So same goes for the Nasdaq and S&P 500. All right. So I have shown you slightly different way this week, the S&P 500 last week. Okay, so if I'm gonna look at that a slightly different way, so this triangle, so basically this support, right? This support or this area on lower time frame during the New York session. All right, looking for that triangle to stay trending and this trend to build over there for more upside. So if I'm gonna look at the lower time frame and during the New York session, this flag to break for upside rather than for downside. All right, break up, correct, go back up. Again, like these flags, If we don't see that, and then again, simply as shown on the other indices, guys, one more leg lower, daily moving averages can be tested. All right, and if they are being tested on this daily time frame, then we will look for them to hold. Okay, and the year to end at higher, at right, this. Yeah, so similar triangle as shown on S&P 500, then drag, test these moving averages, daily trend, and again continue the trend. Okay, but yes, we are expecting them to finish the year end for at higher price. All right, go all the way back to that high. So that's S&P 500. US Russell is 2000 is really struggling. All right, so they are really struggling a lot. They are even not close to that high and showing some serious problems over there, showing that how the small caps are struggling and how the economy is showing. In the previous week we were expecting that trend to continue. Unfortunately, we didn't see that and it broke down for another leg. So again, the analysis is very much simple, guys. So you're paying attention this support specifically, during after the Fed rate decision. Okay, so these short-term trades, and if they start pushing up really aggressively, then you're looking this to go all the way back to that high, and longer-term target is already showing over there. Okay, this big move to happen. All right, so this support area, so this trend line is useless right now. So yeah, green boxes. All right, so European indices very much similar like last week. All right, so they bounced back last week. We were expecting them to bounce. They bounced back this area. Okay, all right, so short-term move almost happened over there. Okay, same move like again. So this green box and red box both are showing where you are paying attention for buy and sell. Okay, and bigger time frame. Yeah, so a big huge triangle can appear over there. So not expect, so yeah, it's the same formation like last week. Okay, same place, same area, same on this, right? So this place is being the box is being held and green box is still holding, and these areas you are paying attention for short to medium term and daily move. And they yes, them to hold and go back up for this next leg. This also went higher from after testing that low. Yeah, so if it tests that same move again, it didn't exactly test that low, but same again last week. So UK 100 index still can fall for another leg lower, guys. It went higher nicely last week. Arrow is still showing, so still pushing nicely higher. We can see break up or another leg lower all the way back to that bottom. So not at a best spot where you can chase that buying opportunity on UK 100 index, on FTSE 100 index. All right, so I'm gonna simply ignore this. We still can see another leg lower, like arrows are showing. So we don't have a best, opportunity. In case if it drag, you can sell it aggressively. If it start falling very aggressively, you can chase the sell over there. All right, like this or like that. If aggressive sell coming, pound bounced back, then you can trade this move to the downside and then again look for buy. Yeah, otherwise ignore this. You don't have a buy opportunity over there on FTSE. Okay, so Nikkei also struggling and dragging lower. Yeah, we may see another leg lower from Nikkei index back to these areas. All right, so a lot of intervention is happening over there on Nikkei index from the Bank of Japan. They are buying ETFs, so causing the Nikkei and other Japanese stock to continue trending for upside. So when you're selling them, just make sure you understand that. So gold bounced back last week. We were expecting it to a kind of neutral analysis we were expecting. All right, so there was a possibility price to just break through and continue to keep rising or test that low. So we can see that it hasn't completed the triangle exactly. All right, so it just simply bounced back without hitting these areas. So what you are looking, simply you are not looking at trending move on gold at the moment. Okay, gold may not trend for upside at the moment, so you are simply looking for price to revisit these lows. All right, so if price revisit these lows, these areas, okay, you're showing some interest over there for buying and gold to continue to keep rising for upside. So let me bring back my structure. My structure was removed. All right, so this structure is still there. So like this and like that. Okay, we don't have a do not sell the gold, all right, at these areas. So it is at a place where we can see that the next breakout can happen aggressively, and it can continue to keep falling. As you know that we are expecting dollar index to just fall, and if we are right over there, then gold will bounce back aggressively for upside. So we simply can see that gold is bouncing off aggressively for upside in these areas, okay, and falling slowly, breaking out, falling slowly, okay, breaking out and falling slowly. So it is simply setting up for this next leg higher. Okay, the drop is slow, sellers are not in control, they're struggling, all right, and buyers are just simply buying every time when it comes close to this previous low and setting up for a breakout for upside. So we may not see that flag clearly on this time frame, okay, but it is simply forming a flag. Let's see on a bigger time frame. Okay, so there we can see that it is turning into a flag. Right, so it is turning into a flag for another breakup for upside. So these areas where you're paying attention for the next leg to happen. So if you want me to show you on a very lower time frame, like 15-minute time frame, all right, then the trend is already appearing over there. Okay, so just simply follow that trend. All right, if you want me to show you these areas, okay, so breakout, another correction, broken out, another correction is just simply forming. All right, and then you are looking it to just simply hold these areas, and you are looking it to hold these areas, risk taking areas, and short term buy opportunity, and then break out and continue to keep rising for upside. All right, so target can be extended for upside. So the trend is just simply appearing over there as long as price stay trending above those moving averages, and then the setup is there, and once it breaks down that trend, then retest those lows, okay, these areas, these lows, and then go back up. So we have seen that the silver was a nice bounce off opportunity over there last week. All right, so last week we were expecting it to break down that flag and retest those areas and then bounce off. So it tested and then bang, on up. So what you are looking, silver to just simply go higher after the Fed rate, the CN. Okay, there is a flag very much similar like the gold, and that flag to break out and continue to keep pushing more higher, or another leg lower and then go higher. All right, this is the structure. So go there, right? So similar flag, the areas you are looking for buy are these. Okay, and these areas. The breakout opportunity is not there. Hold, simply moving averages are showing guys where we should pay attention. So once you see that price is coming, you're paying attention price to hold within these areas, because short term one more leg higher, and if it breaks out, all right, this area and continue to keep rising all the way up to the upper trend line of that channel. All right, that structure. So that's what you're looking. So Bitcoin, some nice move is just happening over there on Bitcoin. We were expecting it to hold that previous low. So again, guys, you know, the logic is simple. We shouldn't expect crypto market to do really well, okay, as long as interest rates are higher, 550, all right, and the Fed is still looking to raise interest rate more above 550. Yeah, so we shouldn't expect, you know, crypto market to do extremely well. You can expect them to do coins to do well once you see that the Fed start getting the interest rate. That going to be a cycle for crypto to go higher. But based on this structure and this, you know, structure, we were expecting it to bounce off from there. It bounced off. Now you are looking it to hold that strength, the strength which we were having on 4-hour time frame, and continue to keep rising all the way back to that high. So yeah, there you can see. Here you can see the mess happened over there. We were expecting it to, you know, correct and break out, but it removed all those gains, right, caused by the SEC, you know, loss in the court. So remove those gains and then found its floor over there. There was a possibility for breakdown, broken down, then again gained. So correcting over there, breaking out, all right, setting this trend, right, and you are again looking for this to correct over there, very much similar like that, and stay trending for upside and go all the way back to that high. All right, so that's the Bitcoin. So if I'm gonna go back to the, you know, moving averages, so that we can see that trend. If I'm gonna hide it, I'm gonna hide it too. All right, and there we can see that the trend is just simply trying to appear over there. So less, you know, less volatility we can see over there. Very less, you know, not so aggressive. So just come back within the moving averages again, like it has done over there, this area. Okay, come back, moving average to hold, breakout. You shouldn't buy over there or sell over there, because the trend is simply corrections we can see over there are appearing over there. So another one to happen, very much similar like that, and breakout like it has done there at these areas. So stay trending for upside. So we held daily lows, okay, which we were, you know, talking since very long that the Bitcoin can test these lows. All right, so it tested and held. But let's see how far these the next leg is going to appear over there, how far it goes. Are we really going to test again this low, or we are going to see, you know, similar kind of, you know, sharp aggressive move here? You remember when we were looking for short-term trades over there, there was a possibility for this, you know, one more leg lower. It happened and nicely held over there. Let's see. Okay, so you following the lower time frame. Oil, Oil going to be the interesting chart, guys, simply. So oil is just simply going, I think I have made analysis last week, but yes, oil is struggling, and some voices are coming out over there from the White House saying that the oil prices are so much high and they don't like, again, they may intervene. You know, what White House was doing, they were just selling their oil reserves, causing the prices to go down. But what is happening on the other side? OPEC countries are cutting the oil supply, causing the prices to go higher. So manipulation is just simply happening from both sides. One side wants oil prices to go down, and the other side wants, want oil prices to go higher. But what we are looking for, okay, we are having that the move is about to end. Okay, the move on oil is about to end. I think I have shown that previously as well. All right, so oil is just simply correcting. So copper is a nice asset. So tell us that what is going to happen with the economy. Either we are going to have more demand or not. So the copper went higher. Okay, now oil is just simply following. So let me pull out some indicators over there. Okay, so copper went for daily wave, weekly wave completed, and then next leg dropped. All right, and happening. One more leg is just, we are expecting copper to just keep trending lower, more on side. All right, so bearish wave came over there. All right, now oil is going for weekly wave. All right, and is simply setting up for this move over there, like copper is doing. All right, copper is telling us that the demand is going to fall for the oil, whatever the supply is. The economy is not. The copper is just simply telling us that economies are slowing down. All right, so less demand for copper, and obviously less demand going to be over there for the oil. So the next weekly wave, it is just simply setting up for. How far it can go is the question. How current rise on oil can go. So some are expecting that 100, right? And based on the exact move which we are having on copper, it went up to 61% of retracement of this previous move, right? And the retracement can happen over there up to 61%, which is, above 103, 105 areas. Okay, 105 areas. So let me tell you something more. Why we're expecting the next bearish leg on oil. So if I'm going to remove that, so let me find. So based on this chart, we were expecting oil to visit 61%. Let me check first. We were expecting exact 61%. All right. Oil to exactly, yeah. So we have seen a nice drop over there on copper. We were expecting, oil to do the same. As that 61% go up to 50, but we haven't seen exact retracement up to 61% of this bullish move, right? Like we have seen copper, and oil went up from 63, 64 areas. Okay, this move is just happening over there. So similarly, we may not see exact 61% retracement like we have seen on copper at this area. Okay, oil may not go all the way up to 105 or above 100. It can even fall below that, even without hitting 100. Yeah, so can fall even from current price. There are some speeches from Saudi oil minister, so that can cause oil to go down too. So basically, what kind of price action you are looking. So price action you are looking is very much similar over there at this area on copper. So if that price action appears from current price, you're watching for that. If that price action appears from $100, mark, you are looking from there. So if that price action appearing from 105, you are looking for that price. Same move which we are having here, you are looking over there on oil, and once that comes, you are just simply following the oil to drag lower. So we are watching that move since very long on oil, and oil is just keep creeping higher. Yeah, and also there is a chance that it can go up to 61% retracement, which is at 105. Yeah, at 105. So still a $14-15 move, still a big move. All right, so if I'm gonna look at the 4-hour time frame, all right, so there. And if I'm gonna, so it is also creeping higher, very much similar like that. Right, very much similar like that. So we are expecting this kind of move again guys, a stronger sell-off needed, correction, and it to keep dragging lower. So if I'm gonna show you exact way, then the all right, so what's happening right now, we were expecting that from there, as you guys know that, right? But price is just simply giving us some move, but and again creeping higher. So this is the trend which is over there, okay? And that was the trend, previous trend, simple extended ABC move, we can say that, all right? Or Mayid move, whatever you can call that technically. So that's happening. So we are looking it to break down aggressively, right? Correct, another leg go higher, or just simply drag. That's the basically structure over there, which is just appearing over there. I need to go back again to 60-65 area. So if I'm gonna go to the lower time frame, 4-hour time frame, right? So still creeping higher, still trending. Let's go to further lower time frame. All right, so still keep pushing more higher after having some supply cuts from the OPEC countries, and prices still creeping higher, and still these tiny flags are just keep pushing more higher. So yeah, another can happen and can push more, as I said, that still can climb up to 105. So we need a stronger aggressive move, an entry, stop, and continue to keep dragging lower. If that doesn't appear, then just keep pushing more higher for an, it is just simply struggling. All right, so struggling, okay, it is simply, we can see that the move is not pretty sharp for upside on oil. So oil is just simply struggling, okay? Anytime can happen that move, anytime we can see strong aggressive move. So basically it will remain a breakout opportunity for the downside, that trend, that Mayid move which is just appearing over there, that Mayid move to break down, and once that appears, entry, stop behind that, and continue to keep dragging lower. That's it. All right guys, so I think enough for this week. So we are having some individual stocks. So stock for next week, I think enough for this week. So stock is struggling. So some individual stock is struggling. So I think next week guys, we're gonna look at them. So we have a decent move on the Amazon last week. Amazon nicely went higher, right? So we got a breakout, boom, tested that top. Nice move happened over there on Amazon last week. So we're gonna look at them next week guys. So enough for this week, and hope that you have learned something new this week and the opportunities. So very busy week. We may see volatility this week. It's a very, very important week. Okay, so investors were waiting for this week. It's a September month, and this week can set the tone for the market for the next for this quarter, right? For the quarter which is going on, and can set the trend till December. So euro Australian dollar, I have already shown you the move. We are looking for them. Okay, understand this. Make sure you understand that when you are selling the Australian dollar against the euro against the Australian dollar. Make sure you understand that. Okay. So crash can happen for upside, right? If we are going to see crash into the market because of the recession or credit movement, it's called credit movement. So credit moment. So if credit moment is going to be happen, then there's going to be a crash for upside, like we have seen crash in 2008 for upside and crash in 2020. All right. So if we are going to see again a crash, okay, that crash not going to happen to the downside. That crash going to happen for the upside. Why that crash going to happen for the upside? Australian dollar is a risk on currency, all right, and euro is also a risk on currency and safe haven currency. So investors, they will run after the euro when they're going to be uncertainty. They're not going to run after the Australian dollar. Australian dollar is a better, euro is a better currency than the Australian dollar, right? So you're not going to see this move then. So you're going to have that aggressive move for upside. So crash chances are increasing, all right? Because I have shown you PMI data, guys. That's showing contraction, all right? Liquidity is shrinking, and credit moment can trigger over there. So the longer term chart is for upside. We are not looking for a move something like that on the euro. Okay, this kind of move again possibly it can test that. I'm not saying that it cannot test that. It can test that, all right? But this is not the trend, all right? This is not the trend. This is not the trend. Okay, this is not the trend. The trend is bullish, right? And this is the trend, right? This is the trend. And market is setting up for another crash. So that's a longer term trend. Okay, we're gonna have that move. So this is actually inflationary move. Okay, this is inflationary move. This is disinflationary move. Okay, so now we are looking for a disinflationary move. That's a trend. Okay, go into that way, not into this way. All right, so we already have that inflationary move here. Right now we are looking for disinflationary move. Makes sense, yeah? Thank you very much, guys. I think enough for this week. Hopefully you learned something new. We'll see you back again in another weekly market outlook next week. Until then, bye. Thanks.